Thank you, Stock Exchange, and greetings, everyone. Thank you very much for attending our session on Digital Roadshow for the third quarter of year 25 of SCGJWD Logistics Public Company Limited. I think we have released our performance report last week, and there's been quite a interesting question from investor and analysts coming back to us about what has been happening and what to be looking forward for the fourth quarter as well as next year. So I like to take this opportunity to give you a brief overview because we have quite a limited time. In the meantime, if you have any question, please feel free to leave your question in the chat box or raise your hand after this session has finished in terms of the presentation. The overview of this presentation, we will talk about the performance highlight of the company and also highlight about the project that we've been developing and also giving you a brief overview about the financial performance of the company during the third quarter. About the structure of the company, the structure of the company is as shown on the slides here. The shareholding structure is as shown. Actually not change, no major change from what we have been reporting to you in the last quarter. And we still keep on our plan on expanding our logistics service footprint both in Thailand and in ASEAN country, including South China. And we right now have more than 2.3 million square meters of service area in terms of warehouse and yard operation. We have more than 14,000 trucks running in our fleet right now. And we also have the barge capability of more than 220 units. We also serve more than 2,400 customers currently under our service profile. In terms of the business structure, the company has two core businesses. The first one, which is the main contribution to our revenue, is the logistics and supply chain, which contribute more than 90% of our overall revenue. And also we have other business which complements the main logistics business as shown on this screen, contribute around 8 to 10% of the total revenue that we have today. I will go in more detail about these businesses afterward, but let's go through the slide first by going through the performance highlight of our third quarter of this year, which we closed the quarter with the total revenue of 6.25 billion baht and net profit of 257.8 million, which is actually a little bit, I think, a little bit growth from what we did last year. Seems like not much, but actually considering the situation that we have this year, it's been quite challenging. And if we, on the other hand, look at the year-to-date 9 months period, we see that we have quite a considerable revenue growth as well as net profit growth, where we closed the total revenue of 9 months at 19.13 billion baht, around 4.1% year-on-year growth, and net profit of 905.8 million baht, around 52.4% year-on-year growth from last year. With the finger crossed that we exclude the one-time item that we have last year about the negative goodwill that we booked around 339.4 million baht in the second quarter of the year 2024. Excluding that, if we consider the net core operation, we see that we have quite a healthy growth this year due to the synergy that we've been building after the merger of SCGJWD 2.5 years ago. And we've been successfully increasing our profitability margin as well as reducing direct costs and SG&A considerably. As you may see from this slide, we've been reducing the SG&A, and you see that the third quarter of this year we have SG&A reduction around 7.5% from last year, and considering the 9-month period we reduced around 6% from last year. So that is our effort in terms of trying to optimize our operation and increasing the profitability of the company, which we has been shown consistently since Q1 this year. We've been lifting our baseline of profitability comparing to last year, with the result that ending 9 months we grow around 50% from the performance we had last year. In terms of detail of each business, we actually have quite a number of outstanding business units that been performing well this year, especially in the quarter 3 of 2025, where we see that many business, as shown on this screen, has experienced a healthy growth in terms of revenue year on year comparing to year 24. General warehouse and free zone warehouse has been growing more than 25% from last year. Food and cold chain 11.6% growth, overseas around 10%, relocation around 35% growth, multimodal transportation around 10% growth, and logistic infrastructure more than 52% growth. This is what we've been doing, and this year I think it is a very difficult and challenging year, I would admit, since the time we trying to manage business. I think this year is one of the most difficult year that we've been facing because of so many strange situation has been happening since Q1 until now. Either be the border dispute, it be the international economic policy, the tariff policy from the US, and also many situation has been happening in Thailand. So we've been trying our best to stabilize and grow our business, and still I think we still have a good upside that we look forward to in Q4 as well as next year. And if we considering each particular industry that we serve, we focus a few important industry that we are serving right now. For example, the commodity business or industry which comprise the cement construction, coal and energy, petrochemical packaging, which is actually the baseline product that we have from SCG Group. We've been serving them quite significantly, and we have more and more what we call transportation share from SCG, meaning that they are sharing a portion of their logistic works to SCGJWD. Since the day we merged the company, the transportation share was around 50% of the total logistic requirement of SCG that we're doing for them. But as to date, we already do for them around 66%. So it's been growing gradually every quarter, and we expect that we will grow more of the transportation share portion, which means that we should be able to grow our revenue from the commodity business consecutively every quarter from now. Even though the outlook of this product doesn't seem to have much growth expectation, but still we still foresee some growth that we can have in terms of logistic work, that we have more transportation share from SCG, and that is the upside that we still see. Another business that been in attention of many investors is the automotive business, which is like been ups and down during the past 2 years. Thailand has been one of the core country which have a lot of activities in terms of the EV car, especially the import from China, and also right now manufacturer in Thailand. However, in the Q3, the economy seems to be slowing down, especially in the automotive sectors, as well as the confidence drop in terms of some of the brands that have some financial problem, and making the consumer seems to be a bit worried in buying new cars during this period. That means it's reflect in terms of the logistics activity that's been decreasing during the third quarter that we see. However, we also see that by seasonality and also by the forecast of our customer, the volume of the cars, especially the EV car, will be increasing in the last quarter of this year due to the Motor Expo, due to the promotion of the sale booths that has been doing every year regularly. We see that a lot of new models has been coming into our yard, and the volume forecast has been seeing. So we we have a positive view in terms of the volume of the logistic for cars and automotive related products in Q4 this year. And that is what we looking forward to. And however, the Q3 performance for the automotive is not very high. I would say it is good, but not very high because of the economic slowdown during the period, which we will see in the financial section of this presentation. On the other hand, another business has been developing quite well and is one of the core pillars of profit making is the cold chain. And we still foresee a continuous growth in terms of the utilization and occupancy, as well as the profit of this business unit in Q3. Actually, it's been growing since Q1, Q2, and Q3. Early this year, we've been opening up new warehouses for cold chain, and we've been filling up the space for these facilities, and we successfully growth the utilization by the end of Q3, where we reached the occupancy rate of around 66% of our total cold chain capacity. And the good news is latest information from the cold chain team is that we have been receiving much more of the seafood and also poultry products into our warehouses during the past 2 months. And we now reaching around 74% of utilization as of today. So that is a good news, and also reflecting what we've been expecting, how cold chain will perform till the last quarter of this year. The freight business is another business that is quite important and also seeing a lot of fluctuation due to the tariff policy, due to the worries of customer in terms of import export. There are certain front load that we experienced during first and second quarter of this year. Right now, we see that the freight index, or in other words, the freight price rate has been decreasing. And that is affecting the whole industry of freight business. I mean, not just SCGJWD, but everyone. And we see also the performance declining a bit in terms of the freight revenue in Q3. So what we've been trying to do is that despite the, insecure situation of the freight rate, we've been introducing additional service to customers, especially early this year. We've been receiving the license in operating as a national single window for the electronics custom clearance document and freight operation. And that being one of our new service that we see is bringing more of the revenue and profit to the company. And we've been trying to promote more of this activity to our partners and customers. And I think even though the freight rate seems to be declining, we still have some solution to help the freight business to still perform in terms of their profitability during this year and next year. We'll see more detail in terms of the numbers later. Before going to that, we would like to still confirm our business direction that we would like to grow our bottom line. I think the 100 billion baht market capitalization in year 29 was the initial, target that we set together for all of us to direct to. But however, due to the stock market situation right now, the volatility in terms of the stock price seems like the market cap is not the main focus for us at the moment. But we would say that if we fix the PE ratio to be the same, we will try to reach that market capitalization, meaning that we are trying to grow our bottom line as our main focus on our work. And we will trying to do that through the 5 pillars as shown on this screen, that is to grow in terms of regional expansion, to build more synergy with partners and doing the cross-sell and upsell to increase our revenue. Trying to also strengthen and increase more of the core competency that we're trying to build some new business up, and also focus also not just the B2B customers, but also trying to tackle the consumer business segment. that is what we're trying to focus to add more of our growth into the logistics business that we have. And also, we are trying to do more in terms of the new business opportunities, especially in terms of property development and digital innovations that we've been focusing a lot this year. We are also doing a lot more in terms of the green logistics and sustainability, which will be becoming our new product offering to the customer who have the concern in terms of their net zero target in the near future. We've been looking for opportunity for inorganic growth as well. I would say in year 25, we don't do much of the inorganic growth due to our conservative management policy because of the volatility of the economic situation. But we still look forward for good and solid M&A opportunities which might happening sometime next year. That is what we're looking forward to. Apart from that, we also do a lot of organic development during the third quarter of this year. We'll see that the project updates has been happening in quarter three, especially in terms of the warehousing business. We opening up one new warehouse in Bangladesh, which has been developed by Alpha Industrial Solution, the joint venture that we have with Origin Properties. And this warehouse has been occupied 100% by our main customers, one of our main customers, which is Bricklin Carrier. The contract is long-term, and this is the build-to-suit warehouse that we successfully opened up just last month. Okay, and this is in full operation right now. Alpha is developing more of the warehousing project and have some plans to sell certain assets into the REIT. And hopefully we should be able to sell at least one project into the REIT structure within Q4 of this year. And we have plans to sell more, maybe 3 to 4 projects into the REIT next year. This is mainly to recycle the financing to fuel Alpha for further project development, because right now we have a lot of backlog in terms of new projects from customers in the pipeline, and they need to get additional funding in order to serve the customer in terms of that demand next year. So this is the plan. And apart from that, apart from the cash which we're gonna have to further develop Alpha, we will also recognize the gain from asset sale along with the asset sale to REIT and each period of time as well. The warehouse development is not just limited to Thailand, but we also expand overseas. And we've been working with our partner in Malaysia called Swift Haulage. We setting up a joint venture called Swift Cold Chain. And the first project of Swift Cold Chain has been to build the cold chain warehouse in Shah Alam in Malaysia. And right now the construction has been done for over 70%, and we expect that it will be complete by quarter one of year 2026. And we will have the second and third project follows next year, which mark our intention to grow in overseas and also to expand our main core competency, such as cold chains, to the market that still have a lot of demand, such as Malaysia. And also we're looking forward to expand more in Indonesia, Vietnam, Philippines, as well as Cambodia, if the opportunities permits us to do so. About the freight business that we mentioned earlier, yes, we have some difficult situation in terms of the freight rate, but right now we are also offering much more of the value-added service to customer apart from the freight itself. We're doing the digitalized freight forwarding service, the custom clearance service that we've been receiving license from the authority early this year, and right now we are closing more deals with customer both inside our group and outside our group. And in these slides, we show one of the, what to say, our friends, which is actually the subsidiary of the affiliates company of SCG Chemicals, has been signing the agreement to utilize the IT digital capability of SCGJWD to serve them in doing their business in terms of logistic activities. We also working with many other organizations, both profit and non-profit. We are signing an MOU with a National Digital Emergency Medical Service Platform to develop for them, utilize our transportation management system and our digital infrastructure to help them to develop the system and platform to manage the emergency cars to help to serve the healthcare sectors in terms of improving the quality of life for Thai people in terms of utilizing this platform for more efficient management of emergency cars. We also joined with the Port Authority of Thailand in their new project called multimodal transportation for the BIMSTEC countries. The BIMSTEC countries are the country to the west of Thailand, including, for example, India, Bangladesh, Nepal, Sri Lanka, also Myanmar and other countries, where we were trying to use the Ranong port as a gateway from Thailand to link east countries to west country as a gateway. And SCGJWD has been joining this project, and hopefully we will be able to do much more with the Port Authority of Thailand for this project and other projects that we have in the future. We also refreshing our existing brand to be more modern. Our relocation service company called JVK Movers has been refreshing their brand logo and marketing campaign, and been receiving a lot of attention from customer. As you will see that we experienced quite significant growth in terms of revenue this quarter for JVK Movers. Apart from the commercial projects, we also do a lot of ESG activities, and we've been receiving a number of awards from many organizations. For example, we received the Excellence 5-Star Corporate Governance Report Award. We received the Climate Action Excellence Award from Federation of Thai Industries. We also received the honorary awards for EEC Workforce Development for our logistics school called SCGJWD Academy. Those are some of the few examples of the award that we've been receiving these years. We also trying to work more, not just for improving the commercial top line, improving the direct cost, controlling the SG&A. We also trying to optimize our finance. And this year we successfully decreased the effective interest rates down, especially for the bond that we've been that was mature around end of September. We did not roll over this bond, and we used some of our own cash flow to serve the majority of the bond and debt, as well as converting those bonds into bank loans, which we effectively reduced the interest rate by more than 1.2%. So we see that with this kind of activity, which we will try to do more in the near future, we should be able to reduce the finance costs that incur to the company and further help to improve the profitability of the business. Okay, before me going to the financials, I'd like to touch a bit on the ESG activities, where we still would like to say that we aim for the net zero by year 2050, which is a very challenging target. Anyway, we are still improving our carbon emission reduction, and this year we successfully increased the reduction of our greenhouse gas emission as shown on the green graph on the right hand side of these slides. See that in year 2025, sorry, the year has been indicated in the Buddhist era, but the graph shown year 2023, 24 and 25, and you see that we have been having an improved greenhouse gas emission every year, and this year we've been improving more than like 30-40% compared to last year. So that is something that we're trying to improve. And also with this activity, we are introducing the green logistics solution to the customer, which will becoming one of our main new product offering for customer, because I think more and more of the conglomerate or big MNC are looking forward to get more of the green logistics service from the provider, and we are in a good position to serve them and to retain them in long term in terms of supporting them toward their road to net zero. So those are all the activities we've been doing in Q3. Before going to the end of the presentation, I'd like to go through some of the performance financial highlights. For that, you get some of the sense of what's been happening. I think you can further study the details of the numbers by downloading both these slides and the MD&A, and also our financial statement from the stock exchange website, as well as our company's IR website as well. And if you have any further inquiry regarding these number or any business details, please feel free to contact our IR team anytime. We'll be more than happy to support you to understand more about SCGJWD. For now, let me go through some of the highlights for you to get a recap of what's been happening in Q3. We closed the quarter with 6.25 billion baht of revenue and 9-month period of 19.13 billion baht of revenue. We've been growing our gross profit margin from 13% to 13.9% this year, which is a good growth in terms of the profitability improvement. We are also growing the net profit margin. I would like to cross finger, of course, that we exclude the one-time negative goodwill recognition last year. If we excluding that, we improve our net profit margin from 3.2% to 7.4% this year, which is quite significant. And we've been reducing the SG&A, optimizing the finance cost, and improving both the net core profit from operation and equity income significantly from last year. Next slide show the distribution of revenue of SCGJWD from each of the business unit that we have, including warehouse and yard management, transportation, other logistics services, and overseas operation. Okay, and other business also contribute around 8%. So please take some time to study or look in more detail from the MD&A, because the numbers are quite detailed, and I think we don't have enough time to say everything here, but let me guide you through some of the more important business that we should be focusing on, starting from the general goods warehouse, which is one of the key profit maker for the company. It's been performing very well since after COVID until now. We still maintain a very high occupancy of the general warehouse business, and we still constantly trying to increase our service area in terms of the general warehouse. Please go to the next slide about general warehouse, and you see that the revenue has been maintained at quite high level. This quarter we've been relocate one small warehouse to another location, so you see some change in terms of the number of total service area a little bit this quarter, and also some slight reduction in terms of GP, but that is temporary due to the relocation. But we still maintain the revenue size that is quite healthy, especially if comparing to last year. And we foresee that Q4, the general warehouse will still perform quite well. The dangerous goods also performing better in Q3. I think one part due to seasonality, we always see is more of the container coming through the terminal during Q3 every year. And this year is also the same. And we improving the revenue comparing to the last quarter. We still maintain a good level of gross profit margin. Automotive business, on the other hand, we see some decreasing in terms of revenue, but due to the worries of the consumer and the slowdown of the economy, as I mentioned already early in this presentation. However, we still maintain a gross profit margin at 31-32%, which is quite good in terms of the considering the business that we do. And I think based on the forecast of our customer and the industry outlook that we see for the last quarter of this year, we should be getting significantly higher revenue comparing to Q3. And actually right now it's already November, so we already see certain results from our automotive business, which is quite okay. I would say that it is going to be better in Q4 due to seasonality and the promotion that's going to happen to boost car sale during year end. Cold storage, on the other hand, has been improving consequently since Q1 this year. And we see that Q3, we have even higher revenue than Q2. And we've been improving both the gross profit margin and the utilization or occupancy rate comparing to last quarter. And as I mentioned earlier also, as to date, we already improved the occupancy to reach around 74% already. So that is much higher than what we see on this slide. And that means that I think Q4 cold chain should be performing very good. I would say they should be performing quite impressively. Apart from the warehousing business, the transportation, I think not very exciting, but still maintain a good level of profitability and revenue. Starting from the B2B transportation, still maintain the level of profitability, level of revenue, but the profitability seems to be improving a little bit. You see the improving of the gross profit margin from 7.8% to around 8.2% this year. Also, the D2C or direct to consumer transportation still maintain quite the same level of revenue, but improving also the gross profit margin. We are trying to optimize, even though certain business is more difficult to increase the top line. We are trying to optimize our direct costs, the operation excellence, and all those things to make sure that we get more profit out of this business, which is quite a big chunk of revenue. If we can improve 1% of gross profit margin from this business, it means quite a significant amount of profit gain that we have from this business as well. The cross-border transportation, on the other hand, is a little bit worrisome due to the border shutdown between Thailand and Cambodia. And that result in a decreasing of revenue in the third quarter, as you've seen on the slide. However, because of the border shutdown, the road transportation cannot be done through Cambodia. On the other hand, we still do cross-border to other countries like Myanmar, Laos, Malaysia, Vietnam, even China. But the road transport to Cambodia has been shut. So we're trying to serve customers through other modes of transportation, and that you see the improvement of the multimodal transportation revenue instead. So please do not confuse with the decreasing of revenue in Q3 of multimodal. This is normal because in Q3 is a rainy season and there's a lot of water in the waterway. With that kind of condition, the barge cannot be operating at its full capabilities, and it is normal that in Q3 the revenue will be at the bottom, meaning that it's a low season. But despite that, if you're comparing this to last year, we see that we have higher revenue because we got some of the additional work from the customer who wants to do cross-border transportation, especially to Cambodia, but cannot do the road transportation. We still can serve them through the coastal and barge transportation, which contribute to the additional revenue to the business unit. And we still foresee this will continue as the border is still closing at the moment, and we still don't know when it's going to reopen again. So we hope that we will be able to acquire more and more customers who wants to cross border to use our multimodal transportation service. Other logistics service also going quite well. I would go a bit more quickly now because we have less time, but the relocation has been growing quite significantly. Self-storage and airspace also growing, especially in terms of profitability. Other logistics like document storage are still, I think, maintained, even though the volume growth, but the revenue doesn't grow as much because of some of the market competitiveness right now. We are trying to solve that problem at the moment. Logistic infrastructure growing quite a lot this year. The freight is declining in terms of revenue, but we still trying to maintain our profitability through our additional service like the electronic custom clearance, national single windows license that we got, and we've been acquiring more customers to use our freight business service more and more. Our overseas is growing in terms of revenue. It's been growing a lot this year comparing to last year. Profitability also increasing. Equity income from this year has been good. I would say we have consistently good equity income from our affiliate both in Thailand and overseas. With the remark that in Q3 there is an accounting adjustment from Transimex Corporation in Vietnam, making them has a -10 from the supposed performance, meaning that actually we should have more than 21.5 million baht of equity income from Vietnam this quarter, but because of the accounting adjustment, we've been decreasing that. So please feel confident about our equity income still maintained at good level. And this year 98.6 is because of the accounting adjustment, because if we add back around 10 million, it would be at the same level as what we have in last quarter. We also trying to optimize our operating and finance costs, and you see that we've been reducing quite a lot of SG&A this year, each quarter, and also year to date 9 months. We've been optimizing the interest rate for our finance costs, and despite the fact that we issue 4.2 billion baht of bond last September, September 2024, this year we do not increase that much of the interest. On the other hand, we've been reducing the effective interest rate that the company have for the debt as well. And coming to the net profit, we closed the quarter with 257.8 million baht of profitability, and also the year to date 9 months we have 905.8 million baht of profit, which is around 4.7% of net profit margin, which is quite a good growth in terms of operating profit from last year. And we still would like to assure you that we have step up in terms of our baseline profitability consistently since Q3, Q4 last year until early Q1, Q2 this year. We've been performing better and better. And also in Q3, despite the low season, we still performing quite well in terms of profitability. And we are looking positively into Q4. And next year, we still have more plans to do more of the cost reduction and also optimizing the synergy that we have within the group. And hopefully, we still have chance to do more in terms of additional revenue stream and boost up more of the revenue that we have both from internal and external customers. And we also looking for some of the opportunity in terms of the M&A and the REIT activities that going to happen would help us to further support the growth development of the company in the year 2026. In terms of the financial position and the financial ratios, it is quite similar to what we report last year. And we closed the quarter with the surplus cash of around 1.5 billion baht in reserve. So we are in a very good and healthy financial position and are ready for any business opportunity that may arise from now. And we're still looking forward for the opportunity to invest and expand our business. But we will do so quite conservatively and at the meantime trying to optimize our organic growth, our revenue, as well as to reducing all the cost and expense as much as possible to make sure that we can improve our profitability into the fourth quarter and next year and year onwards. So I think that summarizes all the presentation that we have for you today. Let me check if we have any question coming into the chat box. We don't have one now. I return the stage to the stock exchange, please.